The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach we go, dear friends, and the S&P's off 26 points with 2.65 billion shares on a quad wishing day. And maybe we are back to these days where we can actually see action on expiration day. Normally they take care of it all on Thursday. A lot of cross currents, but of course, most of this came from and started with the Japanese, who were banking on a much stronger dollar. I think they may be a little depressed now because, of course, the dollar is up a quarter from yesterday's close. And I don't know what else you can say about it. Looks to me like at the best point, you think this goes back down to 93.30. At the high, it's 96.30. So we've got kind of a $3 trading range in the dollar these days. And of course, we've got a lot of action by the Fed and Treasury to try to keep the dollar down, it looks like to me. I know some people think that it's a weak dollar. To me, it's hard for me to justify that call. I could be wrong, and I am often. I want to thank one of our den traders who says that regularly. And it's probably a good thing to do, not get too all wound up in yourself, because that leads to negative profits or losses. As always, you want to think of the market. Probably the people that make the most money as far as programmers, of course, are the high-frequency traders folks. And they hire them pretty exclusively out of the physics departments and kind of push them into being computer programmers for high-frequency traders. For many years, you could walk out of college with a PhD and start at $450,000 the next day as a high-frequency trader programmer if you were into physics. The reason why is one of the core beliefs is a thing called the Heisenberg uncertainty principle, and that is that you have to think of things in two states. Of course, it's always called the Heisenberg cat. Because the idea is that if you put a cat in a box and you've got some kind of random thing that could either kill the cat or not kill the cat, until you open the box, you do not know. So you have to think of it as both, in my paraphrasing it, a good trade and a bad trade. When you close the trade out is when you know. You may suspect, but until you close the trade out, that's when you actually truly know. And you have to treat trades kind of that way, both good and bad. Of course, you always want to make sure that you both hope and have fear. You have fear that your losses can become much bigger losses, and you've got to hope that your winnings become much bigger winnings. And we'll look at it. Of course, we're going into a weekend, and everybody's rather nervous. We had quad witching. Great deal of what we have out here today can be blamed on energy, as those have fallen out of bed, and stocks like Apple, which is, not off horribly. It's off 48 cents. Not the end of the world. It was down to 111.87 in the NASDAQ. But a great deal of what we're seeing is, of course, is more industrial carnage on the black. But I will continue to keep an eye on these and call them out. Again, for my newsletter readers, we are long individual stocks. And I got one up flat, another one up 3%. So I'm going to continue probably to stay away from the indexes. The volumes just don't add up. And on a day like today, again, we talked about this, a week or 10 days ago, and that was the volumes showing up for total shares traded do not come anywhere close for the individual stocks underneath them, and we are seeing that again today. 2.7 billion shares. If you looked at just the underlying stocks, you would say that we probably have something like 2.2 billion shares. And that tells me that the high frequency traders and the machines are extremely active again. That didn't help you if you're in a index trade. It does help you if you're in one of those underlying stocks that tends to be outperforming the general market. And I think we've got a couple of those stocks now that kind of look that way. We've got a big winner in the Tech Insider, my weekly, and we've got some stocks that are showing some amazing resilience. And in fact, a couple that I think are going to have some tremendous short squeeze in the coming weeks and make a lot more money than I probably could giving money back and forth in the indexes. So smooth and steady as we go, at least for my newsletter readers. And a whole lot less heartache and indigestion and no roll aids. I can say that none of these really did anything that would make me freak out so far anyway. Anyway, like I said, stocks either flat or even higher today, making me feel a little bit better. But we will go on. We'll have to see. Maybe the market does crack. Again, we have to think of it. I can suspect, though, with quad witching, we're going to have an outrageous last 30 minutes of the day. Everything I see so far says that we probably will close back above that 1970 level on the S&P cash. That we close back above that would be a pretty good indication that we're still in that upper trading range. Over the last couple of weeks, we talked about the trading range from about 1930 that ended up being about 1920 to 1970. As soon as we broke through 1970, we pretty much raced all the way up to that 20-25 area in the S&P cash. And now, of course, many people, in fact, what I think were the smarter people that were thinking about shorting did short when they got to that 20-25 level. That's where if I was immensely ready to short the indexes, that would have probably been the first level for me to pull the trigger, and a good one. Unfortunately, I guess if I was probably horrifically bearish, I would have shorted and had to stop out many times on the way back up. So I'm kind of feeling a little bit blessed that I didn't give a lot of cash back to the markets and the market gods. As always, we've got to get this show started. And you can give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can post messages in the den, and that would be it. What would cause me to become bearish? Start seeing a great deal of volume to the downside in individual stocks, not just the indexes. Right now, I see a lot of divergence in these, and I'm not calling for a run back up to 2100. I'm just thinking that we're in a bigger trading range, and my belief is that the big profits will be in individual stocks, both short and long, that if you are in the indexes, the action that we've seen over the last 8 trading hours, 7 trading hours, can continue, and it's easy to get chopped up in those. Of course, in newsletters, it's a lot tougher to be in and out of a stock in 5 minutes. I don't think you could email somebody that fast. But, on a bigger macro level, at least for the coming weeks, close over 1970 would have me saying that we're still in this upper trading range. I'm not rabidly bullish. I'm bullish on certain stocks. I'm not rabidly bearish, although I could be bearish on very certain stocks. But again, the problem is that the stocks I want to go short are massively short. We're talking 7, 8, 10, 15, 20 days of days to cover. And that is not something I can do because it's the equivalent of playing Russian roulette. You just hope someone doesn't walk in with some phony news and blow you out of the water on an individual stock. A lot tougher to do on the indexes. But again, the indexes tend to be rather gappy. And, you basically, if you had the guts to hold overnight, then that's great. It's hard for me to figure out what someone's going to do, what Japan's going to do, or China's going to do. We've got so many moving pieces out here. I am much more comfortable in the individual stocks. As we said, we needed to get this party started.
That it's all just a little bit of history repeating.
In 1926, the Great Miami Hurricane smashes into Florida with 138-mile-an-hour winds, killing 243 people, and a single devastating stroke, ending the speculative Florida land boom. If anybody's not familiar with this chapter of financial dementia, since about 1920, everybody that was making huge amounts of money in the New York Stock Exchange decided that they had to have winter homes down in Florida to go to. In fact, there were so many of them that they built a railroad down to Miami, especially for these more affluent folks, and even took that railroad all the way down to Key West. Of course, this came in and wiped that out. I think it was called the Flagler Railroad. The one to Key West got wiped out. But if you ever hear anybody say that, I've got some swampland to sell you, they were selling swampland back in pretty much to Okeechobee, back around Miami in 1925 and 6, up to this. What happened after this, though? All the houses got destroyed. A lot of people didn't pay their mortgages back. No one could get a loan, and that was it. 3 years before, of course, the big blowout. And this chapter actually got me to sell my home in about 2003, I think it was. The reason why was, of course, it had multiplied, not just a little bit, but doubled, and getting ready to triple in a matter of 5 short years of having a place down on the water in Clearwater, Florida. But I continued to watch the insurance prices start to rise and knew that there would be little chance. Anyway, sold my home, was glad because, of course, the next year in 2004, a devastating hurricane came in on the west coast of Florida. Yeah, that's west coast. And pretty soon, I could have replaced my house in about 6-7 years for what the premiums would have been in and for the house. And of course, saw that house almost drop in price by 50%. So I'm kind of glad that I took my cash and am scrayed. I still love that house, though. I tell you what, there's probably not a week goes by that I don't think about waking up and having dolphins in my backyard. But it was a great deal at the time, and kind of hard to justify holding on to something that is going to drop half in price or more. Anyway, we've got a lot of stuff to discuss. I've got a special treat in the last 5 minutes of the show. You don't want to miss that either. Little tease of what we're going to have probably next week. Anyway, give me a call, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I had a question. Why did I sell the house? And it was because insurance went from about $8,000 a year to about $40,000 a year after the hurricane in 2004. And it doesn't matter how much you short the housing market. I would have had 3 years of it going higher before it blew up. Unfortunately, where my house was, that was the high, or very close to it. I think maybe it may have gone up for another few months, but as soon as that hurricane hit, that was it. It put the kibosh on higher prices in Florida. One of the reasons why Florida went into recession far sooner than the rest of the nation. In fact, its housing market collapse probably had a great deal to do with the rest of the United States housing collapse. I didn't top ticket, but I think I got close. But the reason I hate anytime I go back by it and even talk to the current owners is that I built it. And it was kind of a pie-shaped lot, and the houses were kind of long. They were not shotgun houses, but kind of. But I had this big pie piece that I owned all the way to the lot line of the house next to me, and it was about, I don't know, 80 feet, 90 feet on the water line of this pie that wasn't directly in front of the house. So I put in a bunch of palm trees, but at the end of my show, occasionally you'll see a slide that shows the big W from the end of It's a Mad, 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 Mad World. And that's why. There's the W right there. And I'm never probably going to get an opportunity to move in and get the permits and let everybody do it. I'm hoping I can find a place where everybody will leave me alone. But I think I could do that in 1997 and 1998. I don't think I can do it now, but that's still there. And I loved sitting underneath those giant W palm trees. And I still will try to get back to it. It was in Sand Key. It's, if you're familiar with the area, it is down just south of the Ultramar buildings. There's like 5 or 6 high rises down there. Yes, another 400 or 500 yards south of Sand Key Park. Yep. Anyway, and of course it was a brand new house. Everything was nice and new and built on pylons and everything. But anyway, of course, we get back to Yellen and her head fake. Of course, I've talked to her about her for a while. And is she not the Peanuts Lucy pulling the pigskin away just when Charlie Brand goes to kick it once again? At least I think the market is now and will now look at her as the boy who cried wolf. And I have a little bit of commentary, of course. That will be at the very end of today's show about this. But I have a feeling that a lot of the hissy fit that we see today, of course, they used to call it the taper tantrum. Now they're probably just going to call it the Yellen head fake. Maybe it's a new dance move. Like the 70s, they had all those dance moves that you had to do the hustle, all that. The Yellen head fake. You keep nodding yes, and you have your fingers crossed. Maybe something like that. Anyway, a lot of this is that movement, but of course, I don't suspect, let me put it this way. I think we are the symptom of the overseas head fake. When we looked at the numbers from China, it really didn't move that much. But Japan, hoping for a much stronger dollar, cratered. That kind of put Europe into a funk. And, of course, they thought it would be much lower. And, of course, it didn't take very long for the dollar actually to kind of firm up here at 94.85 on the continuous contract for the dollar. And my guess is that whether we're going up or we're going down, I think you can make decent cases for either side. I'm making one to the upside on individual stocks, at least in my newsletters. I guess not just in my newsletters and my personal fortune. But it is a very interesting move out here. I think we're probably going to go back to par on Monday or Tuesday with options rollover. And then on Wednesday, we're probably going to get a good indication how this all shakes out. I think if this would have happened a week or two ago, outside of quad witching, outside of all the contracts and coming due, I think we might have had a much clearer view of what this really meant. There is no alternate reality. A lot of people will play games and say, well, if this guy came in and he was voted in, it would have been a whole lot different. Well, it's kind of a bad game to play. There's no alternate reality where your guy got voted in and things went along just as you saw it. You can't make that argument. You have to kind of play the ball where it lays. And right now, I think it's going to take a couple of days to find that ball somewhere off the fairway. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're going to continue with news because, of course, it is a fairly violent market, and it's probably not going to settle out until probably Monday/Tuesday after options roll over. So we'll talk about bigger things that will matter on the coming weeks. In nat gas, one of the quiet things that happened over the last couple of days that not a lot of people have had time to think about is that there isn't a new coastline pipeline coming in. It is a combination of Dominion, Duke Energy, Piedmont, AGL Resources, and they've applied for a pipeline, which would run about 564 miles, interstate natural gas transmission pipeline, designed to meet the needs of a cleaner electric generation. Anyway, we're starting to see some of these. Somebody asked me, I don't know, 6 months or a year ago on the show, what it would take to really get natural gas going. And I said, you know, you need it to be ubiquitous around the United States. If you wanted to use it in semis across the country on interstates, you had to have somebody there with a place to pull in and fill up. And at least we're starting to see at least the beginnings of a dominant form of power, especially for energy. The question is whether or not any of these will get approved. We've seen the Keystone Pipeline kind of plugged up based on political calculations. My guess is that by doing this now, they are thinking that a change in the White House will mean a change for these pipelines across the country for natural gas. There are many that hate all forms of energy. I guess they think we should live in a cave. Not exactly sure, but it's either this or nuclear power. So someone's going to have to make a decision. And if they continue to do this, I'm going to start throwing rocks at them when they drive by in their cars and become horrible hypocrites. We need energy, and we need affordable energy. At least this is a good sign that maybe natural gas will live up to its promise in the futures. We'll keep an eye on this as it does develop. Tomorrow would be the one-year Alibaba's birthday. Tomorrow, of course, it priced out at $68 per share, went to $120, trading out somewhere around $65 last time I looked at it. We warned on many of these, from Baidu to Alibaba, and a lot of people were looking for the quick buck, and I guess they got it. I can't see a great deal that has changed. I'm not exactly sure what you own. I don't know what you could do to sue the Chinese government if they decide to stiff you. I will not be buying Chinese stocks, but this was one of the easiest ones to spot, since some of the other companies out there, like what was the Angie's List? There were a bunch of these companies that just, they're ridiculous pie in the sky crapola. And a year later, I will get back to saying,
I informed you thusly.
I did. Adobe Systems came out, and let's see, did I have that? Let's get the quote right now. Okay, 81.51. It traded as low as $78 this morning, and overnight, or after, the bell actually went as low as $76. Someone asked me earlier in the den what I thought about, is there an ARB on buying Yahoo and selling Alibaba? Not the one I could see, not one that makes sense. Let me put it that way. I would say that there's greener pastures elsewhere. Anyway, when we're talking about Alibaba, basically they just kind of said, we may have headwinds with the strong dollar in the next couple of quarters, and then it should smooth out. And no one, especially after last night, everybody was a little nervous. Of course, this morning he came in, and as soon as the market started open, we started seeing people buy this up. It is up $1.20 on the day, and may give you an indication of, if the company looks like it's going to do okay, people are doing it. If it's not making any money, people are more than willing to throw the baby out with the bathwater. But Adobe, the earnings weren't that bad. The downside is over the next 2 quarters, but it wasn't that much. Just thinking there's a lot of action and a lot of nervousness, and this one probably gives me a good indication more than most what technology is doing. At the end of the show today, I'm going to preview a new parody, and we'll play just a little of it. And I'll be working on putting the video together with it, and we'll roll it out here in the next week or two. But I think at least I'll give you a taste. It'll be kind of like the mint on the pillow as we go into the weekend out here. And now we'll get into charts and see what we have. We've been talking about some of these stocks in the marketplace over the last few days. And I think we were talking about some gold ones on Monday. Let me get back out. I think it was Monday. Because we've got it. And I was basically talking about how a lot of these stocks were probably getting up to levels where they were going to test previous highs. And one of the reasons why I did not buy these, I didn't think that there was enough money in them. Now, that, maybe in retrospect, if you would have known it was exactly going to these highs, that would have been different. I just look for much more. I want to buy these when they're going to have their big and continuous run. Core Mining is one we pulled out on Monday, I think. But again, there's a lot of gaps in these particular gold stocks. We kind of saw that with Cure Mining, CDE. I've known it for CDE forever. But anyway, we got up to this gap, and of course, kind of reversed out of it today. I'm not really surprised. Again, whether it's gap or whether it's some other things out here, we were looking at confluence levels. It didn't look like you were going to get a lot of a bounce before you got into either confluence or congestion zones or heavy volume down days. In Gold Corp, we got that the 24th of August. You had a 17.2 million share down day. We've got just at the brink of that today at 1406 on Gold Corp with 8.7 million shares. So volume continues to be light. Again, I would love for these things to base out for a while and all the volume and all the questions about getting long go away, and or this thing blow out and wipe everybody out and start all over so that I can buy these. Now, does this mean that this gold move is over? It does not. We could see Monday or Tuesday. This could be nothing but an artifact of this quad witching today. I don't think it is, but I think we're going to know a lot more on Monday and Tuesday. If this is the start of some big move in gold, you're going to have a huge opportunity. And we're not going to be talking about a 1 or 2 percentage point move in gold. You're talking about going from something like $1,100. When this thing does go back up higher, we'll go to $1,800. And I don't know. It just seems to me like something like that or an opportunity like that deserves my patience. And I think maybe I'll have, by having some patience, maybe I'll be able to hold through that entire move without getting in and out. My thought is that this would be the fifth wave in a gold move, and that means that it would be just kind of slower, up every day. You just come back in and see gold up another 5, 10, $15 until it gets to 1,800. Maybe it goes higher than that, but just imagine being able to sit through a $700 ride to the upside in gold. And if I start trading this in and out of it, my guess is that I will not be ready to accept it when it gives me a huge and monstrous payday opportunity. What else do we have out here? We looked at, let's take a quick look at AEM. I think, AEM, we're kind of looking at this one. It got up to the 618, which was, what is that, $25.36. Kind of went that a little bit back into the trading range today. Again, yesterday had some decent volume in this, 5 million shares. Of course, you go back over to the candles where this thing fell apart, and you had 5.8 million shares on the 24th, and you had 5.2 million shares. So volume's about the same. Not saying the wheels are falling off the gold wagon, just that I would love to see this $21 level tested on AEM and actually pierced. I know it came down into those candles. It did it with a lighter volume, and probably why you got this bounce here. Still love to see a long-term signal, and that would mean a piercing of the $21 level from that August 6th low, and a move back into this trading range, maybe a little bit of consolidation, and then maybe this thing would really be ready to fly. Let's see what else we have out here. Let's go back into some of the stocks I've been looking at. Wanted to see how some of these reacted today. One of the first ones out here is Aaron's. This thing's been hanging around at the highs, kind of like Buffalo Wild Wings. And I've been hoping that I get kind of a signal out here. Had a little doji out here on this yesterday. We were a little lower out here today, but it's been banging against these highs with a lighter volume for a while. If the stock market's going up, if the economy is going to get better, I suspect that Aaron's, which rents to a lot of people that are desperate or very short of cash because they make a huge amount of money off these people by renting weekly. My guess is that this would start to come back down if the markets are going to improve, or if the markets, the wheels are going to fall off the wagon, economy's pulling back, we're probably going to see this thing break out. So I've been watching this one, not a clear signal yet today, but I've got some canaries in the coal mine out here. and that would be it. Got an email out here, says, hope this new parody is not using Richard Simmons. I can tell you that this is both a cruelty and GMO and Richard Simmons free parody coming at the very end of the show today. Acardia Pharmaceuticals, we've been talking about these things coming back and filling their gap. Acadia, ACAD symbol on this one. And I can see some at least good calls that maybe some of these pharmas are ready to continue an ABC down. Maybe you can make that same case for the IBB, which we'll look at in a minute. But so far, I don't see a lot of volume in the IBB, and I don't see a lot of rejection out here in Arcadia. And we probably should be getting it. This thing came down on horrific volume of 4.8 million shares on the 7th of August. We've had 1.2 million shares yesterday. We got 800,000 shares today. If you could make a case for this being an ABC down, you would have a 1-to-1 of $23.84. These companies do make money. It's not like these things are totally broke and or they're all losing their ability to sell their drugs. I'd have to research this one particularly to find out if they have anything going off patent. But you got to pretty much think that you've gotten just about everything that you could probably get out of these. Kind of an interesting chart for me. Let's take a quick look at the IBB out here. And, we got into it yesterday. Same thing. This thing had its big high volume gap down. Got into that yesterday with the IBB. Now, what you probably would have liked to seen is a sign of weakness off this coming into that gap of the 20th of August, where that really did have volume, 2.5 million shares. Today we've got, 1.3 million shares. Not a ringing endorsement that we're coming off the highs yet with volume. Yesterday you had 2.2 million shares, which is not all that bad. So I'm not going to get too wigged out just yet on the IBB. I would have liked to seen a little better symbol. I do think that you've probably gotten just about everything you can hope to get out of a single bounce out of this. If you were hoping for higher prices in the IBB, you would probably want this thing to consolidate and go sideways for a while, bounce back and forth, probably between here and 330, build up energy to go back and retest the highs of $400. Could it happen? I'd probably give it about a 50-50 chance now. I have a feeling that a lot of stocks that weren't the bells of the ball in the last big moves over the last 6-9 months are much more likely to get some loving than the IBB. But do I think they're weak? I don't see that quite yet. We talked about Apple. Very interesting to see the reaction. Of course, it happened within about 30 seconds of Janet Yellen saying she was extremely worried about China yesterday. And the entire market turned on, one sentence? 2 sentences about China? Of course, Apple, a little bit better than it was this morning. When you look at a chart, is this the end of the world? It's not. I continue to think this thing kind of meanders her way around and probably up to 120 here fairly soon. We'll be back in a minute, and we got a special treat for you.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. This coming Tuesday, September 22nd, Tom O'Brien will publish the 700th issue of his weekly newsletter, The Gold Report. It's amazing to think that Tom started his newsletter over 13 years ago when gold was trading under $300 an ounce. To celebrate the 700th issue, you can sign up right now at a 20% savings off the regular monthly price, and you can lock in that low rate for as long as you remain a subscriber. The Gold Report is Tom's weekly newsletter covering the gold market as well as a variety of gold mining equities. The Gold Report is published every Tuesday afternoon with a market update sent out to subscribers on Monday mornings. Tom will walk you through what's going on in the gold and metals market each week, as well as providing specific buy and sell recommendation on the mining equities themselves. Now is the perfect time to sign up for the Gold Report. The 700th issue is published Tuesday, and that's when this sale ends, so act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're getting ready. I'll be over in the 4 o'clock hour of Tom O'Brien. In fact, I'll be in the second segment. We'll be talking technology. I think because so many moves out here, Tom's going to spend the first segment wrapping up this week in the markets. So we'll look forward to that. Maybe his call on gold and maybe how he looks at the moves out here in the gold stocks today. In the meantime, was looking at D.H. Horton. Again, not some real clear signals yesterday. It pierced the highs, did so on a little lighter volume today. It's down on lighter volume. Again, a lot of this can be attributed to quad witching. So I'm going to wait for Monday and Tuesday to make any additional calls in this. But I got a lot of stocks out here that could kind of go either way. In the meantime, I'm going to give you a little taste. I've got a new parody. It runs about 7.5 minutes. We're going to give you a couple of minutes here today to take you out to the weekend. Maybe put a little smile on your face. And like I said, a little mint on your pillow like a nice hotel. Anyway, let's get started here on this, if I can do it correctly here. And let's get to the beginning of it. There we are. Okay. And remember, sell when you can, not when you have to. Cover when you can, not when you have to. And, of course, we'll see you Monday. Same bat channel, same bat time.
A long, long time ago, I can still remember how CDs made retired smile. And I knew if Keynesians had their chance, they could make those old folks rant, and maybe they could ignore them for a while. But every Fed meeting made me quiver with every dodge of patience they delivered. Bad news on the ticker, several steps lower markets did deliver. I can't remember if I cried when I read about how GDP died, but something grabbed the indexes inside the day Fed money died. So bye-bye markets to the sky. Drove my Tesla to the dealer, but the batteries had died. Them NASDAQ boys were drinking $1,000 wines, singing this'll be the day Fed money died. Yeah, this'll be the day Fed money lied. Write the book of recession with total faith that there would be no depression if Paul Krugman tells you so. Is every pundit on the dole? Is there only Kramer left to save your fiscal soul? Can you teach flash boys how to trade real slow? Well, I know that you're in love with Jim, 'cause I saw you buying Twitter with him. He's behind the curtain with the man. Just another disguised Tokyo Joe again. Woo! Was it a lonely hedge fund, 3x short, with the Fed doling out the bucks? But I knew they were out of luck the day Fed money lied. And they were singing bye-bye markets to the sky. Drove my Bentley to the dealer, but liquidity was nigh. Them NASDAQ boys were drinking $1,000 wine, singing this'll be the day Fed money dies. This'll be the day Fed money lies. Since 2007 we've been on our own, and debt grows fat on taxpayers' tombstones. Oh, but that's not how it used to be. Greenspan parachuted before the Wall Street thieves and dogma.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.